So what are some of the SPACs you've invested in?
Early on, I was in a lot of the Thunderbridge SPACs, G-Dine, Skills. But for me, I like to really focus on the sponsors. Churchill has been a sponsor. This is their 10th SPAC. I've invested in just about all of them. For 2024 and 2025, being that kind of the SPAC market is coming back into a resurgence, I really looked at and focused at sponsors. So this last year, I had a portfolio of 10 SPACs with a few of the sponsors. So it was the Cantor SPACs, which are five of them, the Cohen SPACs, which are two Churchill SPACs, and there was one BTC Development SPAC. So I've been in those 10 names for the year, probably about 18 months, because they started in May of 24. You started to see the issuance tick up. Obviously, with the election, I think this administration and the regulations are going to be very positive for the SPACs. So over the last year, I've been really focusing on sponsors because what happened earlier in the years, everyone was doing a SPAC. There were 400 SPACs looking for targets. That to me, posed a problem. When you look at Churchill 10 and inflection, stocks trading at 20, warrants are trading at 10, should be real easy to get a pipe done. So I really tried to focus on quality sponsors, and that's what I did over the last year. And as we come out of this, the government's closed, no issuance. We're going to see a lot of sponsors file. I think for me, it's going to be focusing on those high quality sponsors for a number of reasons. One, the yield's going to be there, but two, you're going to get a yield play with upside. If you invested in Churchill 10, you're up 125% in a SPAC, which is supposed to be a yield instrument. CEPT, which is a Cantor SPAC, you're up 22%. So that portfolio of 10 names over 1 year is up 19%. So imagine having a yield portfolio of 4%, your benchmark's probably the 10-year, and you're up 18, 19% with no downside risk. So those are the type of trades I'm looking for going forward.